Welcome to the road to 1 million US dollars. Let's get right into the Bitcoin chart for today. First of all, we're going to start on the 1 hour time frame, and then as this video moves on, I'm going to move to higher and higher time frames. Either way, since yesterday we confirmed this bullish divergence. I will get back to that in just a second. After that, we broke this descending line of resistance and saw a perfect breakout retest resumption from there, leading to this massive pump that we saw on the 1 hour time frame of about 3.5%. So obviously we were on the right side of the trade here, and I saw some awesome trades inside the community as well. Coming back to this bullish divergence, which is when you have lower lows in the Bitcoin price and higher lows in the RSI momentum indicator. Usually this indicates that we are going to get a break from this bearish price action that we saw here recently, as I said in yesterday's video as well. So typically you either see some choppy sideways price action or potentially bullish momentum. And of course, so far we have seen that bullish momentum. Now, I do think on the 1 hour time frame, this bullish divergence is pretty much played out here. Usually you see a 1 hour bullish divergence play out over the next 24 hours or so. And do take note of the fact that even though that 1 hour bullish divergence is pretty much played out, we also have a regular bullish divergence on the 2 hour time frame and an exaggerated bullish divergence on the 4 hour time frame. So all of these signals combined really help us be on the right side of the trade for this massive pump that we saw here since yesterday's video. And with this 4 hour bullish divergence as well, this is pointing towards us potentially seeing more bullish momentum over the next couple days potentially. However, there are some short-term warning signals to be paying attention to. For example, on this 1 day time frame, we basically have a double top here in the short term over the last couple days, but at the same time we also are still holding above this ascending trend line. So notice how on the 1 day time frame we are getting some mixed signals here where potentially we have a bearish setup while simultaneously we are still in a bullish uptrend. The way to deal with this is to be neutral on the 1 day time frame here, because you cannot know if we are going to break to the upside with confirmed candle closes on that 1 day time frame, or if we are now going to break down. For example, if we now continue trading to the upside, then you can easily explain that by this ascending trend line. But at the same time, if we now reverse back to the downside, you can say, yeah, we had a double top here. So personally, I am just going to be neutral on the 1 day time frame for now, until this situation gets resolved. The reason I do think it is more likely that we are going to get another move to the upside is because we have massive liquidity sitting at around 99 to 100K. So to me, it would be quite surprising if we now break to the downside without first taking out this massive liquidity around 100K. But of course, that is not financial advice. I'm simply telling you what I'm seeing in the charts, and you can do with that information what you like. In terms of trading a situation like this, to me personally, it makes the most sense to be trading the lower timeframes here, because it is unclear to me of what is going to happen on this 1 day time frame. But for example, if you go to a lower time frame, like let's say 30-minute or something, this is much easier to analyze and much easier to trade as well in terms of support and resistance, indicators, signals, everything like that. So in my personal opinion, these lower time frames make much more sense to be trading during a time where the higher time frames are less clear at the moment. Lastly, for this 1 day time frame, I also quickly wanted to check back in with this MACD indicator, because yesterday we had a potential bearish crossover, because when I was recording this video, we were trading below this descending trend line, and like I said, I wanted to be patient for another day to see how this was actually going to resolve and if we were really closing the day in red, because I still expected these bullish divergences to be playing out on the lower time frames, which could end up closing the day in the green, which we then obviously ended up doing. So for now, we haven't seen the bearish crossover on the MACD yet, but I will continue to keep an eye on this every single day. Moving on to the Bitcoin liquidation heat map. First of all, on the 3 day time frame, notice how just a couple of hours ago we took out a big bucket of liquidity around 96K, And now most of the liquidity to the upside is sitting at 98,000, but there is also still a bunch of liquidity to the downside as well, sitting as low as 95K. And below that, the next big pocket of liquidity are around 94K and even 92.9K. The way I view these big pockets of liquidity are basically that they are some short-term price targets that the Bitcoin price could be getting attracted to. And this also really helps me when I'm trading the lower time frames. Besides that, I should also zoom out all the way to the 1 year time frame here, because here we can get a pretty interesting picture. For example, there's so much liquidity close to where we are currently trading. Of course, some time ago, let's say like a couple of days or something, we took out over $40 billion of short positions here, which was already something we were expecting. A bunch of liquidity has piled up here over the last week or so. For example, we have over $15 billion worth of short positions sitting at 98.6K. But of course, the big prize here is going to be that 100K level where we have close to $30 billion worth of short positions that would get liquidated if we reach this level. And this is why I was saying that I would be quite surprised if Bitcoin now ends up reversing and actually making this double top without taking out this massive liquidity here around the 100K level. So again, to me, that would be quite surprising. But of course, there is also a bunch of liquidity to the downside here, for example, at 93K or even as low as 92,000, roughly speaking. But for now, I am not even thinking about that liquidity to the downside until we actually break down and confirm a breakdown below this ascending trend line. So in terms of the big levels of support here, that is going to be from 96 all the way down to 95,000. And in terms of this ascending trend line, currently that is sitting at 95.5K. Lastly, taking a quick look at the Bitcoin ETF flow tables. Yesterday, we saw a net outflow of close to $100 million. But to me, this isn't very surprising because we had the FOMC meeting today. So people are usually just de-risking just in front of that Fed meeting because they don't want to be exposed to whatever is going to go on or whatever decision is going to be made during that day. Not something very surprising to see. So again, I will check back in with this tomorrow to see if the Bitcoin ETFs are going to be massive buyers or massive sellers. Lastly, guys, before I close off today, if you want to improve your technical analysis or finally understand what I keep yapping about with this Bitcoin liquidation heat map, then I highly recommend you go to rt1m.com, because this is my website where I've created a full-on trading course, which you can watch completely for free. I am just going to teach you the basics of technical analysis and how to leverage trade. So if that is something that you are interested in, like I said, I created this course and you can watch it completely for free. So go ahead and check that out on rt1m.com. But regardless, if you do end up checking out the course, thank you very much for watching once again, and I will see you tomorrow in the next one.